Testing, testing. What's going on, traders? I'm Antoine Farrar, as always. Welcome back to another video with Digital Goats Academy. Today is our market forecast segment where we pretty much go over what our predictions are in the market. Now, I didn't do weekly review this week because I normally start off the beginning of the month doing something personal with my group. So I'm gonna just kind of touch bases on what happened with indices opening up on Sunday from pretty much today going into, well, not going into Wednesday, but today, and then I'll give, what my thoughts on are on what I think the market is going to be doing overall the rest of this week. Now, last week we did project the market to buy up and it did, but just looking at this is S&P, so just looking at S&P, we'll use this as an example until I decide to go further in depth into what the market is going to be doing. But S&P, right? Let me see, where is Friday? Okay, so this is Sunday's candle. As you can see, the market started selling off Wednesday. It seems like it's always been doing this between like Wednesday and Thursday. Market started selling off. It reached the high, started started selling off Wednesday, dropped super low Friday, and then continued its move from Sunday, like the gap down, and then actually tested this gap to push the market down further. Now, I am going to go into like what I believe like S&P may be doing, but as you can see, what S&P has been doing, it's definitely been creating that bearish momentum that we like to see. But the only thing is that at this point, the market has definitely hit areas where you'll normally see some type of reaction. So we're definitely going to have to play to that. But man, with all the confusion, S&P and Nasdaq have definitely been like the clearer picture. But so this week, Sunday, S&P gap down. Remember, we always annotate our gap somehow. I recommend that. If you don't, and you're like, why did the market just come back to this general price zone? That's probably why. Is there a gap? And again, you can see my gap is normally highlighted with hollow purple boxes or, shaded in purple boxes. Either way, if it's purple, it's normally representing a gap, right? You already know that if you tune into my channel. And if you tune into my channel, make sure you do me a solid and hit that subscribe button on your way in or out, whichever best serves you that helps that can help the channel grow. But anyway, like I said, there's a gap right here. So as you can see, between Sunday and today, the market has been playing to that gap. Today, after we had like a major sell-off during London, New York said, fuck the sell-off, and then brought the market all the way back up. Not completely up from where we sold off from, but definitely back to where the Sunday gap is at. Now, you can look at this as, I don't look at gaps as like, how can I say this? Because I kind of do, but I don't look at gaps always as like directional bias. They're just like roadblocks, if that makes sense. So, or speed bumps. I'll probably use that better. They're probably like speed bumps in the road where the market will kind of like slow down, throw you off, and then continue in that direction. Is that the case all the time? No. So you can't really play gaps to try to say, oh, this is the overall direction. What you have to do is obviously go off the trend, but recognize that, okay, because this market produced a gap, the market could, once I identify the direction and it is the true direction, the market can play within this gap as many times as it wants to before it breaks out. So that's why we're annotating gaps because we know that price is more than likely after it breaks out is going to come back to that area to test it if it respects that zone. It's very rare that I see a gap that doesn't get tested. And if it does, it's normally again us heading into Q2, but also with high momentum, high volatility and high momentum. We don't really have that right now just because of what's going on across the world. I mean, around the world, we have that war that's happening with Iran and other neighboring countries. So obviously that's playing effect into the market. And we know that already. We know that things like current events, war, political figures, those can induce a reaction in the market that will make it very unclear and have you skeptical on what the overall direction is. To be honest, man, we kind of should have seen this as far as like the selling opportunities, especially every time the market broke back, pushed back up because it never broke, it never broke above these highs. So just looking at it, higher high, lower high, lower high, lower high, breakout. Now we've hit an area where the market should respect some type of structure, right? And I'll go into that a little bit later. So Nasdaq, the same thing. Nasdaq, we had the selling opportunity. Remember, we were selling. I don't know if y'all remember this from like two, three, it might have been like a month ago where we were discussing, like around 2, 3 weeks ago, we were discussing Nasdaq. Nasdaq created this 945 candle, pushed into the candle, and then sold off from there. You see that? And then we created another 45. Well, we annotated another 945 candle. Market sold off from there again, did a shallow pullback. And then obviously today, London sold off. And then New York finally gave us a bull move. Now, the one thing about NASDAQ is that we're still in that general area where we were looking at to buy up from. Even though price has been going slightly lower, it definitely created support right here. So I'm gonna just annotate that. And then once I go back, like I said, I'll touch on what my overall predictions are, but I'm gonna just annotate that because that's important. So same thing here. We gapped down. Nasdaq wasn't as like volatile as S&P was and US 30 for some reason, but I mean the move was still aggressive. So it gapped down, testing to this area, brought the market back down. It's still early in the week, so do not be fooled by like the back and forth between indices. Indices are going to bounce between price zones. It's basically price trapping itself. So when you're seeing the market like bounce around, don't try to create a narrative. Definitely wait for the direction because the only move that we have overall here is that the market came from um, a selling opportunity or a bearish move. So until we get like a breakout candle or until price starts showing bullish momentum, we have to believe that the market is selling off. And again, I'll touch on that a little bit more, right? US 30. US 30 was like, I was like, oh my gosh, oh. US 30 gap down, same thing, very, very violently. Probably US 30 was the worst out of the big three, yo. Very violently, and then actually rose up yesterday. So after we went into Monday, the market actually bought up New York. I think it was New York. Started at London. I remember it was around like 6 a.m. So started London and then started actually getting bullish around 6 a.m. You weren't able to establish the bull move until like opening bell because opening bell was wild yesterday. I'd never seen it react like that since I started trading. So that was kind of wild to me. Or maybe it was the day before. What was yesterday? Yeah, it was opening bell yesterday. So created a high point right here and then sold the market off around 2 p.m. yesterday, right? So as you can see, the market has been playing within this 945 candle. Normally, I would react off of this and say that, okay, well, the direction is still due south, right? But since we closed going into post market, I don't like to base my analysis off of what the market did overall during the trading day between London going into like the end of New York. So the only thing I could use is technical analysis at this point to formulate a bias that, best serves us, right? So now that we've gotten kind of like our short view of the weekly review, right? Let's look at what our predictions are for the market this week, right? So today, like I said, with US 30, S&P, NASDAQ, all of them pushed down during London. So London is where we got an extreme bear move, but the move definitely started from Sydney session. So the market had already been selling off during like um, going into the post market. Sydney definitely helped it collapse, and then once London opened up, it definitely sent this down like very aggressive, like straight to hell, you know what I'm saying, if you will. But at that point, we've pushed down to an area or a territory where the market has prior structure, right? Areas where we were looking at to either buy up from at one point or areas where we were looking at the market to support. So that is why I even annotated this area. I do not know why I even have this blue. I was trying to highlight that it tested this high. So this is even a better example to use with NASDAQ to kind of show you the sequence of like when I be looking at like indices and I see this formation that's happening, it's very common where you see it and it normally indicates like a buy direction. So you'll have the market create like a leading candle, right? It'll create like a leading candle. And then the next move, which, obviously there's a lot of chaos over here, but the next move will test the high. Testing the high confirms the buy. I wasn't even trying to rhyme. Don't block me, you know what I'm saying, for saying that. But true to a certain extent, right? You test the high, more likely to buy, right? So at that point, when the market has tested the high, it needs to create a new sequence. It needs to create structure. So from this point, as you can see, these areas technically tested the high of this zone. And again, if this is confusing, you can turn it to a line chart. And what you could do is just take like a horizontal line. And normally where you see like the indentation, like so you see right here, if I zoom in, this indentation right here, I know that that's a previous high, right? So what I could do is I can go from either this point or this point, and I'll go from this point. Draw a horizontal line. Let's make it very noticeable for us. I don't like that. All these colors we already got. I guess that's noticeable. That's not red. That's like a pinkish, but whatever. We're just doing it to demonstrate, right? So this is the previous high. As you can see, price broke out of this area, tested this one time, previous high. How do I know? If I go to a candlestick chart, I can see that this is the high of this market. And if I break it down on a smaller time frame, I guarantee there's either a doji or some type of dip down, right? There it is right there. There's the doji. Oh, wow, that was perfect too. I wasn't even trying to be perfect. Here's the high right here. See the high that the market tested? And again, followed by doji, two dojis actually. So the market tested this what? What do we need? How many times do we need the market to touch a certain price zone before we consider it structure? We need it twice. So after this sequence, after testing the previous high, we're testing this high, but also we're establishing support. So we have one, two, three. If you don't want to count that, I get that because when you look at it on the line chart, this is really what only matters. And if you go out to the 4 hour time frame, you'll only see this information. So let's just say one, two. We know that price brought a wick down in this area, but two times. This is why I already highlighted support. You know what I'm saying? Not to mention, I am still playing the market off of this pattern at this point because I do believe this is still a buy pattern until the market shows me otherwise. But at this point, we have two touches from the sequence of the market testing a previous high. That may sound like a lot, but if you just draw a line, a diagonal line from this trend, let's acknowledge this trend first. You can see, in fact, we have been trending up from just this general location, from this price area of 23,900 something, right? Price has been bullish. How do we know it's been bullish? Price hasn't come back to this low area. Yes, it has brought the market down a lot, but at each time the market has come to this general price zone around like 24,430, the market has rejected it, or I don't want to say rejected, but supported it. So at this point, just from this trend over here, we can see that the market has established some form of support. And then when you start viewing back out, you can even scale and probably see better. Let's do this. Because I mean, you can draw trends all over the place, but what's important is us establishing where the trend is at, right? So I could have just left, that trend there. That would have been one trend, and what we could do is Either way, how you look at it, the market is trending up. Unless it comes back to this general, well, unless it comes back to these lows over here, which is still a possibility. But overall, the market has definitely still been trending up. Remember, we're up. If you look at it on a higher time frame, we still have to view the market as being up. Does that mean that you won't have opportunities to catch sales? Yeah, you definitely have opportunity to catch sales. But I like to stay with the directional bias until the market shows me its hand, even if the slaughterhouse is the market trying to hunt for stop losses on the bear side. And that's really what it looks like it's been trying to do because we haven't had any major type of like for all the times that we've been selling, the market hasn't really broke out of no structure. Like, yes, it's created these lower lows, but it hasn't like closed below nothing. You know what I'm saying? So when you factor that into the entire day of the market, that already tells you right there that okay, well, we're not in a true sell, but we are pulling back very aggressively and probably just like I said before, just ranging in this general area. Same thing with S&P, definitely with US 30. So the entire time we've been ranging, US 30 probably looks more of a sell than anything, but to me, it's still been ranging, and to me, that move down was just an overall pullback to establish some type of structure so the market can start buying up. So just off of what happened today for the Nasdaq. I am definitely looking at the market to continue buying up, unless it actually returns back down here and closes below that. We do have some wicks, but I don't even like to entertain that. The only thing that I would pay attention to is like if the market tried to return to this high. The thing with indices, though, in my experience, whenever it creates that support structure, you get the breakout and then possibly like a test back to like a high point that's not like extremely low. So the market testing this wick right here. So this wick right here, to me, the market is testing or attempting to test this wick to test some form of high in order to keep the market trending up, right? So when you're seeing the market create these support structures or indices, especially, that's normally a clear sign that that market is about to get very aggressive to the upside. And the same thing can happen like on the selling side as well, but we're not entertaining the sell. We're still looking for buys because at no point has the market broke below these areas. Now, yeah, like I said, you still want to day trade. So this position up here, what the market looked like it gave you is like another opportunity to jump in for this entire move from February 17th, and then how it sold off like the last 2 weeks. So it looks like the market just gave us another opportunity. Well, not the last 2 weeks, like the last 3, 4 weeks, but the market gave us another opportunity to buy back up from this general support structure. And I like that we didn't close below, like I said. So to me, I'm still bullish on the Nasdaq and S&P. I know that by design, the market is definitely trying to tackle people's stop losses, right? So just pay attention to just react as if you know, like, okay, well, when I jump into a trade, what time is it? And also, is this area very common that other traders will be looking to enter? Because if that is, that means the market sees that other traders are entering in those areas, right? So just exercise a little bit more patient, and then you might have the sniper entry. Like today, this was the sniper entry. It did come all the way back down after 10 a.m., but you still had your position. So 6 a.m. market shot up, opening bell, the market got dropped down, saw that, and then after that, 10 a.m. candle straight shot us up. And the only thing we did from here was close what at 1400, well, which is 2 p.m. So I don't think 2 p.m. is bringing us down, especially since we didn't get brought down already. Let me see this. Yeah, I don't think 2 p.m. is bringing us down. I'm playing off of this pattern right here. So if you're very familiar with this pattern, this is called a morning star pattern. And if you just use your fib, normally, you want to see like some type of pullback, like either 38% or 50%. But the fact that the market is trying to test like this void space where the previous high, well, where this wick is at, which indicates a previous high. To me, this is the market trying to test. And then obviously us going into Sydney, we could probably have some consolidation. And then maybe as we head towards closer to London, we'll get a boost in momentum to the upside. That's my projection for the Nasdaq. But again, I don't trade the Nasdaq as often as I do S&P and US 30. But best believe whatever I'm looking at for US 30 or S&P, I'm definitely thinking that the Nasdaq is going to do that eventually. I just know that its trading cycle's a little bit off. It's kind of sporadic a little bit because of the tech space. Remember, out of the big three, the Nasdaq is really the most newest or more new compared to S&P and US 30 that have been around a long time, like since the 1930s, probably even longer than that, right? Well, I wouldn't say going back into like the 1800s, but well, possibly because Japan did create the trading system. So they were using trading in like the 1800s. You know what I'm saying? There's a fun fact for y'all if y'all didn't know that, right? But anyway, let's go into S&P, close out with US 30. Actually, we're going to close out with Bitcoin because I do want to touch on that. So same thing here. Market shot all the way down, going in, I mean, from Sydney into London. And then again, we tested back into this gap. Now, one thing is that for me, even though we did break a little bit lower, we established to some area that I already had annotated that I wasn't paying attention to. And for me, whenever I see like the market come back to a zone that I had previously marked up, I'm going to trust myself because obviously I left it there for a reason. So you can see this was the highest point. Now I remember because this was the highest point that the market had created after creating these low points, right? So this is the highest point, and then obviously we ended up breaking out of that. And then this was the previous what? This was the previous high, which is now what? Support. This is support for us now. We have to respect it as support. And then when you turn it to a line chart, you can see that one, two. That's why I like turning it to a line chart. It just makes things a lot more clear. Let me see what it looks like on the daily. Well, so looking like what I mentioned, this is the start of the sequence. Just like what we saw with the Nasdaq, right? We have our leading candle right here. We established our first area of support right here. Market shot up, and now we're establishing our secondary level of support. And you can't really see it on the daily, so you definitely would have to go to the 4 hour to see it. But I just wanted to show y'all that from the daily time frame because we saw that information far back. So just overall here, if you want to count this, one, two, three, but my focus was where we're at currently because even though we dropped all the way back down to this support structure at 67, between 67.30 to 67.15, we didn't close below. We didn't close below the support structure. If anything, we rejected it with the wick or supported it in this sense, but it ran away from this area with the wick, which is something we like to see. Again, use past information to make sense of the present. Every time the market has created a wick, what has it done? It's pushed the market up for sure. That's not saying every time that it's gonna actually like buy up, but the consistency is true. The proof is in the pudding right here. Here's a wick right here. What did the market do? Get bullish from there. Here's a wick right here. What did the market do? Get bullish from there. Even this wick, it got bullish before it sold off. And, the fact that it's not one of these gigantic wicks, that definitely puts my mind at ease. So I'm looking at the market saying, yo, I don't want to come down here for whatever reason yet. You know what I'm saying? Each time you see like pretty long wicks or moderate wicks, what has it done? It's pushed the market in that general direction. Wick right here, push the market in that direction. So use the past information, you know what I'm saying, to make sense of what your bias is. It's right here. A lot of this information is right here. The only thing is that we get beat up on is either you not using proper risk management or your entry is just way off because you wasn't exercising patience and actually trading. You were more gambling. But again, I'm not here to give a speech on what you need to be doing as a trader. We're just here to talk about what's going to be happening this week. So, same thing here. We've established support. I'm going to roll with that. So, I'm looking at S&P to buy up from here. Even though we had like the chaos where the market has been selling off, we haven't had any true break of structure from these major areas that we've created the past, and this is December. This market came all the way back to December. Well, I mean, December wasn't that long ago, but it definitely feels like that long ago. But again, level of structure right here, support. Then we bought up, and it just looks like we're pulling back to keep the momentum running up. Let me actually look at the Hakanashi candle. Again, I like viewing things from that Hakanashi because it tells you this is momentum right here. This is definitely a momentum candle. Flat bottom, right? And how do I know it's momentum candle? Maybe I don't even know what Hakanashi is, but I turn it to Hakanashi and I look to the left of the chart and I start seeing, man, every time these candles were like they didn't have a wick at the bottom of it created like momentum to move in that direction. And you can even see it on the selling side. Flat top, momentum. And of course, it's going to bring candles that's going to, bring a questionable view, but each time the market sold off, right? So I wouldn't say it was like clear as day once you got here, but from this point to this point, yeah, that was pretty obvious. You know what I mean? So with seeing the momentum, especially post going into the post market from New York, yeah, I'm thinking that we're continuing this direction. And if it is going to show me something, it's going to show me something after doing what? Testing some form of structure. So this is our level of resistance for S&P right here currently, this gap. So we need price to break this. You know what I'm saying? We could have reactions because how many times we've been testing in this area? Quite a few times from February 20th. So you see the market has been, playing around in this area. So what we need is for a price to break pretty much 68.90 and close above or 68.89, you know what I'm saying? Or you could just say the threshold of 68.96 to 68.82 and price needs to basically have like a momentum candle that closes above that. It doesn't need to be super aggressive or extremely bullish, but we need to close above here, slight pullback, and then the market push back up. So we need something like this. And y'all know when I get the drawing, it normally starts coming to fruition. So, market play around. If, we're doing something like this, what I'm more concerned is like when we get right here. So we may have a reaction, may even want to try to test all the way back into the gap. Now, if we get it straight, so because we're heading into Wednesday, we're going to have a lot more news that's going to carry more volatility. The chances of that happening will probably be more so a reaction at open and bell than just like the market actually trying to do that. So if we're up here, open and bell will more than likely try to bring us down in order to test some area that we weren't paying attention to and then continue to trend in that direction, right? Makes sense? Makes sense, right? So US 30. And again, with US 30, I did mark up our 945 candle. We've been pretty reliant on that, or it's been a resourceful tool that we've used that has definitely been helping us either have good projections in the market, get out the market when the trade is going against us, things like that. So I don't use it all the time, but again, I do mark up like what the 945 candle is doing if it's showing some significance. So yesterday, it definitely showed us that it was buying up until we hit 2 o'clock and then the market sold off from there. And as you can see, because we're into this gap and the 945 candle, I'm not paying too much attention to like, I know that this rejected it, but I'm not paying too much attention to say that, okay, price is reacting off of the 945 candle. If I was going to use that data, it would have had to have done that like while the market was still open, not like closer to the market close. So I would have had to see this type of move like happen like around like 11 for me to be like, whoa, we probably are continuing pushing down. So again, another level of, oh, I drew this out. I drew this out. But what I already had was this level of consolidation. I think I mentioned this, like I don't remember when I mentioned this, but probably in December I said that I wasn't sure if price was going to actually push down here, but I wanted us to know that, yo, there's consolidation down here. So don't be surprised if price was to come down here. Oh, I remember. That's when I was looking for to sell before price actually popped up a little bit higher and then said, hey, now I'm gonna start selling after I played the fuck out of y'all. You know what I'm saying? So price coming back to consolidation. What do we know about indices? Indices love consolidation. So this was our major level of consolidation that we had annotated. I really don't remember it, but I remember that I did do it. You know what I'm saying? So the fact that price is testing the high of it, and actually rejected, that was a good sign to me. That brought a moment of clarity where, like, yeah, I believe that bulls are in the market. And again, if you establish like what the candle is doing, look at what the candle is doing. Just from over here, from yesterday's move that sold us off, right? Sold us off going into London. We have one, two, or at least two candles, two bearish candles that this bullish engulfing closed above, right? It engulfed both these candles, and it looks like the only thing it's doing is testing this area in order to keep buying back up. So just looking at this pattern right here is like that's signs that, the market is trying to get bullish, you know what I'm saying? Not every time when you see a bullish engulfing is that the case, especially when the market has been trending to the downside, because that can kind of scream that, hey, I was just trying to pull back real fast in order to push the market back down. But the fact that I'm seeing support structures from both S&P and the Nasdaq, I'm gonna definitely rely on that. So, because again, we're still overall up in the market. The market hasn't like shift directions in the very least. The only thing is that its correction phases has definitely been trying to push us down, but it hasn't really broke structure. If anything, the only thing that has broken structure is US 30, but even out of the major zones that we had annotated before, we haven't really done it. Like this makes sense to me. A market broke out of this. So let's see. Guess I don't need that anymore. This was the resistance that I had, marked up initially expecting the market to sell off, and then it just said, "Yo, I'm gonna keep going up." And that's what it did. And now that we're back here, to me, this is 100% pullback of this consolidation zone right here, and especially since I have it highlighted like big. So that was a major form of consolidation for us in comparison to where you see these smaller versions that I have. So yeah, I definitely think that the market is gonna, because each time we've had it, the market has reacted to it until it broke through. So if we are gonna break through, to me, the market is gonna shoot up higher and then want to do what? If we were to continue selling off, which I don't think, we need what? We need some form of resistance. We can't sell if we don't have some form of resistance, because we know that if the market is selling without having like true resistance, it's just pulling back. And like I said, that's what I think it's doing. It's just pulling back in order to buy back up. So unless the market rejects this area again, which I don't see that happening. I think next time we come up here, we're going to blow through it after the market, probably hesitates buying up by like respecting this slightly and then pushing the market up further. Because that's just how indices roll. I mean, if you've been trading indices, you kind of understand that by now, the synopsis of it. So we would need the market, if we were selling, we would need the market to establish some type of resistance up here or test a previous low to start the sequence of a downtrend. I haven't really seen it yet. You know what I'm saying? All this leftover liquidity up here, this is information just the market waiting to, get everybody comfortable. Oh man, the sell is coming. And then all of a sudden you see the market at 51,000. You know what I'm saying? So that's what we're looking to catch. So I'm still not looking at the market to be a bear market, even though, like I said, there's been a lot of confusion due to the war. But again, at the end of the day, the market has still been ranging. Even from this point, we can see that it's still been ranging. It hasn't gone nowhere. It's broken out of like a couple of highs, but like truly hasn't established a direction. But now that we're at this major level, well, this major level consolidation, I definitely am, banking that, yeah, we're going to treat this as support and at least push us back up here, and then we'll kind of establish what the directional bias is from there. But we definitely need the market to push back up here in order to do that. Now, for at that point, We have other resistance structures between like S&P and the Nasdaq. So if they come back up here and start to reject, that's kind of telling us, all right, we probably are going to push down a little bit lower than what we initially expected. But that's not what the Federal Reserve is talking. The Federal Reserve is talking as if they're hawkish. So I'm gonna kind of play to their tune, and yeah, I'm gonna still, buy these positions where the market starts pushing down. It wasn't as violent last year because we saw that every time the market got brought down, it gave us an opportunity to buy back up. So, um, I think that the same sequence is happening that, every push down is going to be an opportunity for a buyback up. The only difference is the amount of pips that the market moved has definitely doubled since last year. Last year was kind of like you would see like a 5,000 pip move for US 30. Now you're seeing like a 10,000 like average, like on average. So definitely be careful, definitely pay attention to what you're doing. And last but not least, let's look at Bitcoin. Now, I had already established that I believe that Bitcoin was gonna, and when I look at Bitcoin, I'm viewing it like US 30. So I'm viewing it as the godfather of all crypto tokens. So to me, Bitcoin should have the most influence on how other crypto tokens are doing unless they have some funny stuff going on. Just like, how you look at US 30 or S&P and can correlate it with some stock, but not every stock is doing great at that time. Same thing I'm doing with Bitcoin, establishing it as the index for all cryptos, right? That's how I'm viewing it. But we had mentioned before that once the market started selling off, we believed that our first pit stop would have been like 65K. We reached that. We actually reached a little bit lower, which is actually better for us. We reached 59,991. That's crazy. $991, right? But as you can see, this is around our 65K area where this red zone is at. Well, we have a consolidation zone and a red zone. This red zone was what? Previous resistance, right? So the fact that the market is actually trying to support the resistance, we have to respect it as such. And how come? Oh, okay. See, all these colors be having me confused. But anyway, at this area, the market has supported this structure. Now, we do need like a break. It's been hesitating and kind of throwing like mixed signals, but it has been establishing some form of support. Every time the market has pushed down, it's brought it right back up with a stronger candle. So just looking at this sequence right here, I don't know if y'all can spot that. Look how strong these bull candles are in comparison to the bear candle that's being produced. So shit, hell, just looking at this area right here, we have an establishment of what? A breakout. Wants to test back in because it didn't truly break out of all this. Tested this candle, our next area, well, our next candle, not necessarily our next candle, but our next couple of daily candles. The market should eventually break above this area. And as long as we have a close above 70K, that's telling us, yo, I'm going back up. And this is exactly what we were expecting overall. We didn't know how low Bitcoin was going to go. I did believe that there was a possibility of it going all the way back to 24K. But now that we see what's going on, especially like what is this, the monthly time frame? Especially on the monthly time frame. Because again, we're 3 days into the new month. So the fact that the monthly time frame is showing us a bull candle already, I mean, it did start selling off, but the fact that it is bullish now, I think we're going to continue the bull run. And I think cryptocurrency is about to make a new high. I mean, Bitcoin is about to make a new high after, it breaks up out of the zone. I can see that happen like in the next 2 years. I forgot what analyst said this or what expert said this, but they said by 2030, they expect Bitcoin to be at 700K by 2030. That is fucking 4 years from now. I'm zooming in like 700K, and we can't act like that's no longer possible. I know that may seem far-fetched, and people be like, there's no way. Dude, I thought you would think that US 30 would be priced higher than Bitcoin, you know what I'm saying, for how long it's been out. especially like US 30 or the NASDAQ. No, Bitcoin cryptocurrency came into the block and just said, hey man, this is a new way to make money. You know what I'm saying? So we can't act like the things that we knew in the past will stay true to the present and prepare us for the future. So with these guys, with what seems like they're overshooting, they might be right on target. So yes, it looks like unfathomable to be able to reach 700K from here by 2030. But hearing that, that's how I was able to take advantage of S&P. Hearing that is like, well, everybody better start loading up their crypto portfolios because if that happens, Joe, that is definitely going to be a game changer. And here's the thing, by the time people are able to invest where it matters, Joe, price will probably have pushed up by like 200K at that point, yo. That is not the time to say, I trust cryptocurrency now. You know what I'm saying? Should have been on that wave. You know what I'm saying? Sad to say, you should have been on that wave. These prices where it's at, even with, other investors that have it at way lower prices. Like I said, these are probably the last times we'll see prices this low where it even matters. You know what I'm saying? In your lifetime. At that point, it's up to the kids and grandkids. You know what I'm saying? Because you missed your opportunity. So again, you don't have to take my advice, you know what I'm saying, or you don't have to take my word for it. Definitely trust but verify. Do your own research. But yes, I do think that we're establishing some form of support down here. And cryptocurrency, well, Bitcoin is looking to buy up from the 65 to 60K area, which we've already been buying up. We're at 68K currently from 65 this morning. So what should I do to other crypto tokens? Other crypto tokens should go up in value depending on their usage. Now, that's not saying everything across the board, but we should start seeing more tokens start going back up in value. So it's better to invest while the market is down than while the market is up. You shouldn't need to see that the market is up to say that this is a good investment. You definitely want to see it eventually turn profits or turn up. But right now, where we're at currently, like this is probably the better opportunity to buy. And then we'll just have to see how the market reacts going into the rest of this year. But 700K, you know what I'm saying, in 2030, I mean, at one point, we didn't believe that it was going to go to 100K. And here we are right now at half of that currently, 65K. So that's all I got, traders. I hope that helped y'all. Again, this went a little bit longer because I decided to kind of add weekly review, even though I didn't do the full scope of weekly review, but I definitely wanted to highlight what the market did going in, opening and Sunday. And like I said, what our projections are for this entire week. So I'm still bullish. I know we've been kind of caught with our pants down here and there, but again, trade because our bull moves have definitely been solid. They just haven't been like continuations. I think I think currently now we're in the slot for continuation because again, after this month, we're definitely in the Q2, which presents more trending opportunities and when the market starts to make its shift on this is what the fuck I'm doing until October or August, you know what I'm saying? But that's all I got for you traders. I'm Antoine for Raw. I hope everybody has a successful trading week. I hope y'all make a lot of money and I hope we all win this year just like we were winning last year. So I'll see you on the next video with Digital Goatz Academy. I'm signing off. Peace.